Welcome back to our channel, where we explore the world of finance. This video will delve into the world's top 10 index funds. Index funds are an excellent way for investors to gain exposure to broad market segments, offering diversification at a relatively low cost. Let's jump into the list and understand why these funds stand out. 1. Vanguard Total Stock Market Index Fund Overview. This fund aims to track the performance of the CRSP US Total Market Index, which represents nearly 100% of the investable US equity market. Why it's top? It's one of the largest by assets, providing broad exposure to small, mid and large cap stocks. Its expense ratio is incredibly low, making it a favorite for cost-conscious investors. 2. Vanguard 500. Index Fund Overview. Tracks the S&P 500, representing 500 of the largest US companies. Why it's top? It's synonymous with the US market's performance, offering low fees and a solid track record of capturing the market's growth. 3. Fidelity 500 Index Fund Overview. Another S&P 500 tracker, this fund boasts an even lower expense ratio than many of its peers. Why it's top? Fidelity's commitment to reducing costs for investors makes FXAX a compelling choice for those looking for S&P 500 exposure without breaking the bank. 4. Schwab S&P 500 Index Fund Overview. Similar to others, this fund tracks the S&P 500 with a negligible expense ratio. Why it's top? Schwab's emphasis on low costs has made this fund highly competitive and appealing to investors who prioritize expense ratios. 5. iShares Core S&P 500 ETF Overview. An ETF version of the S&P 500 offers similar exposure, but with the benefits of an ETF structure. Why it's top? It's liquid and cost-effective and provides the advantages of ETFs like intraday trading and potentially lower capital gains taxes. 6. Vanguard Total World Stock Index Fund Overview. This fund exposes investors to domestic and international stocks across developed and emerging markets. Why it's top? It's an all-in-one solution for global equity exposure, suitable for diversifying beyond US borders with a single investment. 7. Vanguard FTSE Developed Markets ETF Overview. Focuses on large and mid-cap stocks from developed markets outside the US. Why it's top? It's a go-to for investors wanting to diversify internationally without venturing into the higher-risk emerging markets. 8. SPDR S&P 500 ETF Trust Overview, one of the oldest and largest ETFs tracking the S&P 500. Why it's top? Known for its liquidity and being the first of its kind, it's a benchmark for many investors and institutions. 9. Vanguard FTSE Emerging Markets ETF Overview. Provides access to large and mid-cap stocks in emerging markets. Why it's top? It's a vital part of a globally diversified portfolio, offering growth potential from economies on the rise at a low cost. 10. iShares MSCI ACWI ETF Overview. Tracks the MSCI All-Country World Index, covering developed and emerging markets worldwide. Why it's top? It's perfect for investors seeking a one-stop solution for global stock market exposure and balancing growth opportunities worldwide. Why index funds? Diversification. These funds spread your investment across hundreds or thousands of stocks, reducing individual stock risk. Low cost. With their passive management strategy, they typically have lower expense ratios than actively managed funds. Transparency and predictability. They follow a set index, so you know exactly what you're getting into. How to choose. Investment goals. Consider your goals such as broad market exposure, global reach, or specific market segments. Expense ratio. Consider the cost. Even small differences can impact long-term returns. Performance. While past performance doesn't indicate future results, it's good to see how these funds have tracked their benchmarks. Index funds are a cornerstone of modern investing, offering a straightforward, cost-effective way to invest in the market's growth. Whether a beginner or an experienced investor, these top 10 index funds provide a solid foundation for your portfolio. Thanks for tuning in. If you found this video informative, remember to like, subscribe, and hit that bell icon for more insights into investing and finance. Drop your thoughts or questions in the comments below. Until next time, happy investing.